What's up, everybody? This is Hoda, co-founder and CEO of StockCard, and I want to talk to you about how to use StockCard's latest feature in order to avoid making emotional investment decisions. So let's say you are logging into your StockCard account or your brokerage account and reviewing some of your investments. For example, I'm paying attention today to my dividend seeker portfolio. And as you scroll down and look at the companies that overperform or underperform the market, you come across one of your investments, such as Pets Med Express, ticker PETS, that it has lost almost 60% of its value since you've invested in. So this calls for an immediate emotional reaction. We are all humans. When you see such a decline in the price of a stock that we've invested in, it's just so natural to fear a little bit and worry about whether this is a company you would want to hold on to. And maybe secondly, you start asking yourself, with such a price decline, whether it's an opportunity to add more to your portfolio. So the feature I want to talk to you about is the sentiment box. We've recently added this to all stock cards, and sentiment is a feature that help you figure out what's the market overall sentiment about that company, whether investors are fearful about the future, or whether investors are overexcited about the future, or whether it's a calm day and you can make a calm and emotion-free investment decision. So it looks like PetMD, Pet Med Express, has a very negative sentiment around it. Investors are fearful about the company and most likely have oversold the company's shares. Today, you might get overwhelmed by the market's fear. Be careful. Which is what happened when we saw 60% decline. We were wondering what's going on. An immediate reaction was, oh my God, let's go sell this stock as fast as possible and get rid of it as soon as possible. But you can click here when you see the sentiment is red for this stock. You can click on see why and collect more information about what's going on in the market. So we provide 4 different pieces of information about market sentiment. The first one is about money info. So we look at the volume of buying and selling in the stock market about that stock, and we use what's called as check-in money inflow. And this will help you understand whether the net volume of trading was positive or negative. So it looks like for PETS, PETS, the investors have been selling this stock down. The second indicator is short interest, which is an indicator of what are the number of stocks out of the outstanding shares in the market that have been shorted. Short sellers are the investors who believe that the stock's gonna further decline and that they bet against their company. And wow, look at this one, 48% of outstanding shares for pets is being shorted. This is very rare. You would rarely see investors be so negative about a stock to be willing to short 48% of outstanding shares out there. The 2 other indicators are simple moving average and relative strength index, and you see both of them are also in fearful or red neighborhood or area. It looks like that these investors are so negative about the future of this company that they've been selling and shorting this company, and it looks like the company is getting into an undervalued range and oversold range. So when it comes something like this, you would want to make a decision and see whether you want to keep this stock in your portfolio or not. What you would want to do to see whether the company still has a strong operations or not. So as you know, as before, we can easily get that from StockCard. Looks like the company's strength is not as great as it should be, but it's also not in the red neighborhood. So let's see what's happening with the company's strength. Sales growth is relatively stable. This is by any means no growth stock, but it's still a company that has a relatively flat sales growth rate. look at profitability. Looks like the company is been profitable, but the profitability has remained stable. Cash availability, which is a concern. If the company was running out of cash, this would be a big concern for all of us. But it looks like the company has no debt, and the company also generates free cash flow, and the free cash flow has been growing nicely in the past 3 years. So while the company is struggling, obviously, to compete in the market and grow its revenue, as we see in the sales growth rate, it looks like it still has a very strong balance sheet, which is about balance sheet is all about cash availability. So that won't be a concern. And with the price decline that we've all observed recently, you see this stock is now, the share price is extremely undervalued. What I want to bring your attention to is this price to sales ratio, which is this indicator here, which is an indicator of what people think the value of this company can be based on its sales. It's only 1.14 times the sales, meaning that the value of overall the company is almost the same as the amount of sales that it had this past fiscal year. And that is an extremely rare case that you come across when you come across a company like that. And the reason we've been investing in this company has been for its dividend, because it's part of our dividend seeker portfolio. So we would want to see whether the dividend is still there. When you click on the dividend section of a stock card, you realize that the company now pays almost 9% dividend to its investors, and the dividend payout ratio has been, the dividend yield has been increasing consistently in the past few years. Of course, some of this is because the companies have been dealing with these increasing costs and increasing the amount of money that it has to spend in order to keep growing and keep its sales growing. That's why the earnings has been declining. And when you have lower earnings, when you're paying dividend, it means that your dividend is going to grow as a total percentage of your earnings. But overall, it looks like when you put all of this together, you realize that the reason the stock price is declining, obviously, is because there's an extreme negativity in the market about the stock. The company is still relatively stable from an operational point of view. It's in an undervalued range, and the company has a strong balance sheet, a strong cash position. Of course, if you are a stock cards paying user, you can click on CY and see and read about the stock cards official decision as to whether it's worth holding on to this stock or not. But if you are not even a paying user of a stock card, you could use the combination of sentiment and the information that we have always been providing about the company's operations, the market, investment return, and share price to make a mistake-free, emotion-free investment decision. I'll see you next time.